SBA 7A loan for startups up to $5 million are available. I'll be walking you through how to get them, the parameters, even if you're a non-startup and you'd like to get an SBA 7A loan or alternatives in the meantime while getting approved for one, and so much more. Hi, my name is Michael with Viral Funding Solutions. I'm a business loan broker expert who's been helping out a lot of businesses, startups and non-startups, get SBA loans, 7A loans, microloans. I'll be walking you into some of these alternatives and so many other ways where you don't have to go and feel pressured, sickening, frustrating. It's just so much overwhelm built in your system because of these people out there overpromising and under delivering and trying to show you something that doesn't even exist. They bait and switch you. They keep bombarding you. You don't get the best maximum terms, rates, and so much more flexibility, longer term strategic partnership and roadmap. And so that's the difference with me. I do personally care about who I help, as in who are they as a human, how can I help them, as well as in their business. And I go the extra miles and lengths. And as a business owner myself, I know how hard it is to try to get funding, let alone an SBA loan, if you can't meet the parameters and qualifications for them. So I'll leave more information as well down below in the description, as well as a questionnaire to get in touch. Make sure you fill that out if you haven't yet. And if you have, I'll get back to you in time. So let's go over this. Underneath here, you see results. And that's ultimately what I want to get you to. If it isn't an SBA 7A loan for a startup initially, or if it's a non-startup situation, where do we begin? And that's the difference with me too, is I work on also the personal and business credit side so that we can help get unsecured funding there, and then evolve eventually into these unsecured loans, secured loans if you have collateral. But you want to do it step by step, and it depends on where you are in your journey. So underneath here, SBA 7A option with South End Capital. It's a division of Stearns Bank. And when you're working with an SBA loan lender, whether it's a non-banking lender, a lot of it goes through the bank, and that's how it's given to you. And the underwriting process, the teams, an in-house look, it's super powerful to have these days. And it's not just as simple as going to the SBA.gov site, typing in this SBA loan lender from this state, because they may not even know your niche. They may not know you extensively enough to go through it all. The underwriting, the technology, the streamline, the hassle-free process, the recognition, the partnership. There's so much more, the better rates and terms. You don't get charged as much. Post-closing liquidity, good faith deposits, as you've probably heard of that. Some of them have them, some of them don't, and that's fine to have. In term sheets, making sure everything is correctly and up to date in the market for what you need. And that's why it's also better not always to go with your own bank because of how they may not be able to fulfill it quick. Underwriters, they're becoming short-staffed in the banks. In the technology, the communication, they probably don't understand your situation as well, your niche, etc. So with South End Capital, that's one of many, but one that I strongly recommend. And I have various different SBA 7A loan providers, 504, etc. But South End Capital is an amazing one that I've been helping out plenty of businesses and business owners get. And I'm going to go into it here. And you'll want to go through me. So stick with me until the very end of this. And I'll show you how to get started with all of this, the application process, the flexibility you get to going with someone like myself as your broker/agent, the communication process, the handling the documentation, the revision of it, how I'm communicating on the back end with my team, the lender, the underwriters, specialists, even more, and how hands-on I can be and a lot more things. That's why you want that. I'd say here best with SBA for startups or franchise startups. Less than 12 months is usually preferred across the board, and that's what we would consider more of a startup. Like startup, do you mean that I have an LLC, I have this entity, but I had to stop and pause, or I haven't really used it, and then I came back? That can be somewhat considered a startup, but less than 12 months a lot of the times is what a lot of these lenders are looking for and consider. Documents and information needed are below and how I will ask for them. So it's different depending on the SBA loan lender. Keep scrolling down until you see the first blue hyperlink to find that. Keep reading this part first, unless you want to write it. But you'll need an equity injection of at least 25 to 30%. And that's not the catch. You're like, oh, well, you're telling me now I'm going to need to add in an equity injection. Well, how am I going to get the money? How am I going to get the cash for this? Let alone post-closing liquidity and doing all of this. Well, you have to be resourceful. And a lot of us, we save money from our 9 to 5s. And I remember being there in that place and where I was doing that, maybe not as much as I should have. But there are ways for you to be able to do that. Maybe you have another business or you're a partnership of another business. And so a lot of what these SBA loan lenders want to see, and I'll get into this in a moment too, is making sure that money is also stored into an account, like a personal business checking account, somewhere where it's like, okay, it's been seasoned for like 3 months. A lot of the times these lenders like to see that, not just where, hey, your mom or somebody handed you the money last second and now you have it. It's like they want to know how you're going to be able to micro and manage that money that you have already been saving, as well as what you'll be able to do when you're servicing the debt and how you'll manage cash flow. That's entirely what they want to see, is how you can manage your cash flow. And that's one indication of how they do that. Now, not all of them would say, hey, 3 months, or well, it will be okay if we could do that. But the majority of them want to make sure it's seasoned, just to make sure that it's held in an account and you can keep it in there long enough and not withdrawing and using up that money. And then so much is being deposited, more is coming out of the account. And so there's these other red flags that we look at. So an equity injection of at least 25 to 30% in this market. I would have said 10%, some cases 10% per case, per experience basis. So if you have other businesses currently running, it's going to help you more. If you have had experience and it wasn't such a big turmoil or something happened and it's per case base, it's per credit base as well. And so usually you see 25 to 30% though, which is really reasonable when you're talking about getting your startup business off the ground. And I'll go into some of the things they'll want to see in terms of documentation. But like I said before, it can vary on experience. I've seen 10%, but not always, given because of the experience, and more may not be there. Having relevant experience in that field, operating underneath another business that's similar or not exactly, but in day-to-day operations and managing your cash flow, et cetera. That's the primary emphasis of most SBA loan lenders. When you start getting into the above, from 150 to 350,000, cash flow becomes more relevant. There are some, if you are looking and you're not a complete startup and you have 2 years in business and you're looking between 20 to 150,000, you want to make it done in 7 days time and you have at least 150,000 in annual gross revenue with the 700 plus FICO. I'll leave more information of that down below in the description as well. But the majority of people are looking for 150 to 350 or 350 to 5 million. And if you list you want 5 million in an SBA loan, but we look at the financials, or before even looking at that, some lenders get like backed off and they go, well, whoa, that's too high of a request. And they look at a soft pull a lot of the times. Initially, we can look at it, and then it's a hard pull usually with SBA loans. If you do an in-house, we can do a different look right away where it doesn't affect your credit score a lot of the times, where we can pull something and look at it, at least from what we can see. And if we look at the personal and business credit, that's what's very important as well. And I'll get into that here in a second. But cash flow is a big component of how you get to manage that cash flow. And it's going to be more imperative as a startup than a non-startup that, hey, what are my business projections? How do I expect the cash flow to be? How do I expect to manage it? Who's going to be managing and what departments of my team? And just your business operations and what you expect to grow the revenue over time. They're going to want to see a business plan. And I'll try to leave more information to that, how you can get a business plan. And I'll also leave it in the questionnaire when you submit it. Make sure to get that done. Cash flow, it will help definitely. The credit requirements are generally high though, like 675. You've seen some like 660, 650, but a lot of the time you see 675 to about 680 or 700 and above. So making sure you have a strong enough credit shows us character and morality that you can even manage the debt. Can you even manage the debt you already have, your bills? Why can we give you more? Excuse me, why should we give you more if we know you can't handle that? And so it's most important that you have that. Not necessarily will always business credit be the emphasis, because you're a complete startup. Now, if you're a non-startup and we're thinking, well, you can qualify, you have years, 2, 3 years, 4, 5, 10 years plus in business, you haven't established business credit, like why haven't you been doing that? So that's a big component. They're going to look at that FICO SPSS score as a non-startup. And if you have problems on it, like you've had a lien, open liens, even on your business credit side, not even talking personal credit that can take it up another level, but you have collections, you probably just recently got them removed. But as a non-startup and those issues, if it's within the last 3 years, bankruptcies, foreclosures, liens, a few more things, no late 30-day payments, and even extended out even more, then that can decline a file. There's even more that we look at, because it's with non-startups, it's credit, cash flow, collateral. Collateral won't always be taken as the primary, but we will want to see what you at least have. If it's possible to, it's better to, but it's not always the main priority. Cash flow is when it comes to SBA loans. The credit requirements, like I said, generally high. So if you have that, it can provide a seasoned account where the cash will be used, using this to start the business, like a business checking, personal account, et cetera, is what I mentioned earlier. That way it's not just shown as borrowed money. So it also, another thing too, is like you just had money sitting underneath your bed. Like, where is this money come from? Where is it coming from? Like, is it going to go away before we even get to close this, before we even ask for it earlier on? Like, we have to make sure that you have enough from what you can do. And there have been times where people will go and liquidate. They have these cards, these business credit cards. They have buildings, real estate, you can take equity out of, or what you have cash on hand. So there are many ways to look at this scenario. Although another way to go is a home equity line of credit or a home equity loan. That wouldn't be my first direction. But if it's your last resort, you've exhausted everything. There's also 401k IRA financing. I'll get into some of these alternatives though. That way, it's not just shown as borrowed money. Rather, it's been stored in an account for about 3 months. Is what most lenders like to see. I'll show you that SBA 7A loan option, but if you can't meet it for several reasons, we'd have a personal startup loan, and I'll go into that momentarily. Up to 500,000, but 600,000 in some cases. But again, your credit needs to be somewhat strong enough, but more of a 680 or so. And sometimes it can be less, but you want to have strong enough credit. Before you read through the rest of the email, keep in mind, or before you read through the rest of this part, you can let me know after you're done with this part. Do you have equitable collateral? If so, what and how much? Do you have liquidity and post-closing liquidity? If so, how much? How much of a down payment can you provide? This goes in part with equity injection and a question just right above it. What relevant experience do you have, if any, or similar? Because that's a huge component if we want to even give you money for that new startup or an acquisition. So those are acquisition questions as well as that I'll ask you, whether it's a franchise, but it has to be profitable. Most recent last 2 years is best. And that's what you want. We're looking at the owner's financials more than yours entirely. And we still have to, if you have an existing business, it helps in determining and making sure you can service the debt, etc. There's things that I'll communicate with you on those regards. Details, you can get one through the SBA with a minimum FICO. You went there with my preferred lender at South End Capital, best with SBA 7A app through the Stearns Bank division with South End Capital, up to 25K for the express loan, or for 200,000 to 5 million in financing sizes. Smaller loan sizes are available through our SBA Express program, and then the microloan, which I'll leave you to down below, between 25 to about 150,000. Here are more details. You get to work with the top SBA preferred lender that is focused on you and delivering speed. Loan approvals may be used in days upon receipt of a complete package, and funding occurs in weeks, not months. Usually you see 4 to 8 weeks, 4 to 6 weeks. It can be done sometimes even sooner if you have everything ready. Nationwide lending footprint in all 50 states. DC, no population restrictions, and there are larger transactions from 1 million to 25 million that may also be considered via our SBA 504 and USDA program. So that's an advantage. We're talking restaurants, we're talking different entities, and what we can add as subsets. We value personal attention to detail, and it's of most importance to us. I value character. I can say that for myself and my team. We offer fast and efficient tech-enabled SBA financing with the human experience tailored specifically to you and each borrower. Product service overview. So loan sizes 200 to 5 million is usually what you see. 350 to about 5 million. You see with a lot of these full documentation, underwriting, tax returns, PFS financials, projections if applicable, all SBA required forms, etc. And I'll go to you and I'll say, hey, this is what we need to do first. Submit this all to me via email. I'll evaluate and analyze it before I send it to my lender and my team. Or hey, let's connect first with the digital application, or this is what I would like for you to submit, hard copy or digital, or both. And when that gets done, we'll communicate with you. I'll be on the emails. I'll be hearing in a lot of the times, the majority of the time, and I'll either ask for it for myself individually, and then, or my team will also as well. We're talking a little bit earlier today, making a few things, helping out a few clients. And as an introvert, it's quite hard to do that for an extended time. But there will be a process, and I'll show you what is best for your situation. And then also with like disclosure laws in California and all these things, how an independent business loan broker as myself can handle documents. It's sometimes restricted and it's across the whole board. And so I'll let you know in that email and that questionnaire that you'll submit. I'll show you what something that looks like this, if not more extended. So all SBA eligible industries and properties types are considered, and 675 preferred credit, lower credit considered through our marketplaces. And a lot of these, the startup lenders, what they look for is that larger size. I mean, anything underneath it, we can try, but they really want to go for something that's going to require more, and the actual return is worth it. No minimum time in business. Startups considered with strong collateral, experience, and personal sponsorship. So yes, unlike a micro SBA loan from 25 to 150,000 where no collateral will be asked for, a lot of these SBA loans will ask you to collateralize, and there's guarantees to it. 75 to 80 or 85% of it depends on that loan program. Like express loans and a few other ones, you may only see up to 50%. Sometimes they become more expensive because of those reasons. And so startups are considered with strong collateral. the equity injection, whatever you have on hand, what can help service the debt, and what we can look at and we find required. We want to look at that and say that's what we can take, and it has to make sense. Experience and personal sponsorship. Preferred minimum global debt service coverage ratio 1.15 to 1.25x. Sometimes you see at least 1.2. Sometimes we can go less than 1.15. Maybe we need to look at a refinancing, consolidating situation. Projection-based revenue considered. Loan proceeds can be used for most eligible businesses purposes. Examples: purchase, refinance, construct real estate, working capital, debt consolidation, equipment financing. Okay. Business acquisition, startup, etc. All SBA eligible businesses, property types considered, including special purpose property and land. That's also something that I do myself, where we can look at land underneath SBA loans. We can do a ground up construction, commercial property, mortgage. It depends on how you want to have it set up. And startup, etc., as we saw there. High loan to value financing possible with compensating factors, including up to 100% loan to value CRE. Purchase financing for borrowers that meet certain eligibility requirements. Rates from WSJ Prime, Wall Street Journal Prime, 7.75% currently. When you're watching this, that may go up or down, but the prime rate plus 1.75 to 3% is what we see. The sweet spot from about 350 to 5 million or 200 to 5 million, you see somewhere between 2 to 3%, or 2.25 to 3% a lot of the times. With express loans and lower amounts, probably up to 3.75% or 3.75% to start, 4.75 or 6.75% in some instances. Fully amortized loans from 10 to 25 years. And we can do that up to 25 years with the real estate inclusion. When available, additional real estate collateral, primary or secondary residence, investment property, etc., may be required for you to pledge. Alternative financing options are offered through our marketplace when the internal financing options are not available, and I'll follow up with you if that's the case and help you there. Here are some qualifications and borrower eligibility. Public records, have no bankruptcies or foreclosures in the past 3 years, have no outstanding collections, have no open tax liens, no recent 30-day late payments, and even if it's a little bit extended. Business credit as well, we look at that. That can also like wipe it out: foreclosures, bankruptcies, liens, all of these things. Even if you just got them cleared, do you have them removed? You know, when we talk about bankruptcies and things that can remain on your reports for up to 7-10 years, depending on the classification, or it can even be more or less than that. Is it justified? We got to look at things. For your cash flow, and there's more to the credit side than just that. Trade lines, and is it recently opened trade line? Like, it's not credit worthy. FICO SPSS score isn't there with the personal and business. For your cash flow, and this is for more of a non-startup, the FICO SPSS business liquid credit. Like, yeah, because you're a startup just getting started, of course you might not have that yet. For your cash flow, you must have sufficient business and personal cash flow to service all debt payments demonstrated by 2 years of tax returns and financials. And that kind of goes into like a non-startup. So some of this is kind of mixed with non-startups. So just keep that in mind. Here are the SBA specific criteria: have no felonies, have no delinquencies, and or default on government loans. The basic eligibility requirements, and keep this in mind, this is again for non-startups, a lot of it. Time in business above 2 years. Owners must be U.S. citizens, lawful permanent residents. That's for all. Your business must be located in the U.S. for all. Must be open to all non-discriminatory basis for all. Businesses operating for a profit. I mean, will they get there? If you're a startup, you have your business plan. What do you project? And I'll have that again down below if I haven't said that, or I'll leave it to you in the email when you fill out the questionnaire. Your business must be able to demonstrate repayment ability from earnings. Your business must be not involved in lending, investing in real estate, politics, gambling, or sex-related industries. So financial, investing, and those kinds of projects for real estate investments, fixing and flipping, apartments, however your business is set up to operate, making sure you use the funds correctly. And there's a little bit more, but at least 51% of the property square footage must be occupied and used by the business, especially if we're looking at SBA 7A CRE loans. Process flow: step 1, pre-qualification. You will input your personal info along with loan info, such as amount for purchase or refinance, depends on what you're doing. Of course, your business ownership info and property ownership info, of course, if we're looking at an SBA 7A CRE loan and some other instances. Step 2, financial section. I will need to collect, and this is kind of, keep in mind, again, for non-startup, I'm not going to go through those right now. You can see it on the screen there of what it would look like if you had to do a non-startup, and there's more to this as well. But business plan help right here. With any loan you're getting through the SBA 7A, even with the startup or franchise startup, you'll want to make sure you have a business plan. And if you don't have one together for your day-to-day operations, cash flow, how you'll manage this, who you will have on your team for the startup acquisition, et cetera, and all else SBA 7A business projections, you can check out the sample template here. And really what I would like you to go through is the SBA site. You probably have seen this. Maybe there's something else that comes up that I can show you, but you can go through this and find the sample template. And that would be a great one to use. And if there's anything else, like I said, again, and I've seen some other ones out there that I'll show you, but you can go through this, download the right business plan, and you'll see that by reading into that. You see there lean startup formats, key partnerships, key activities. You'll be walked through that. Channels, cost structure, revenue streams, and you can see download Andrew's business plan. And you can learn more about it. And if you need to run that by me and see, I can help you with that, of course. Note, so you will first go through the app link I'll have below for you, and then I should be notified at that point, and I have a portal that I'm doing all this. I can see what is being submitted. Ask for your documentation at that point. Once you submit the digital app, you can hold off for now and sending it to me to my email. I'll let you know. Hey, send it to my email first. Excuse me, and then let's submit the digital app. Or submit the digital app, then submit the documents to me. Or hey, submit the digital app, and then let's wait for my internal team with myself to collect this. So there are different ways, especially for different reasons, and then for like different states, like the disclosure laws and stuff like that. So I just want to make sure I'm compliant with everything, and you'll know, okay? You'll be taken care of. And then I should be notified at that point. I can ask for documentation, and then we'll go through the initial, and then we'll go through the processing review with myself and my team. And then from there, I'll communicate on my back end with my team, and then we'll collect documentation if I already had it, and then I'll do something else. And then there might be a setup now with you and them in a quick phone call just to go over things and then collect more documentation. That can be a quick 3-day turnaround from there. And then the next part, we might ask for more documentation. We go through the next parts and so forth. So you will go through that. And then I'll kind of just tell you there more or less what I would expect. So I'm going to just quickly go over this. There may be other ways, and I'll let you know. Step 3, credit approval. An appraisal takes place. Environmental review phase 1 depends on what you have again, but that's step 3. Step 4, the closing. I'll need business documentation. The lease agreement depends on, again, what it is, of course. Loan doc preparation and more that we'll ask for, insurances and stuff that we'll go for it, and we'll let you know. Don't worry. So you don't have to send me anything via here, or I will ask you to do that. Maybe I have an example for you as well in the questionnaire where I say, hey, 750,000 minimum is what you're looking for. And we amortize it over 10 years at a prime rate plus 2.75% at 10.5%, let's say, which is common. And sometimes you see between 2.25 to 3% additional on top of the prime rate with 120 monthly payments. Then monthly payment is around 10,120 or so adjusted. It's not exactly it, principal plus interest, but it can vary on many factors. So it can shift up and down due to the market, especially like with business lines of credit. Like every 12 to 24 months, there's like a revision if there needs to be a change. So every like quarter, there might be a look at your industry and also the marketplace. So just keep that in mind. Sometimes, a lot of the times you see fixed, you can see a variable depending on the economy and a lot. Total interest might be $464,415. Total financing cost is $1,214,450. This is not set in stone, as I just said. These are estimates, just so you know. We'll still need to see. You get a term sheet or another way application. You will be able to go through here. You'll likely have a link. It'll look something like this. And there are times where I can submit it on your behalf, or I'd recommend you do it. I'll let you know. A lot of the times I'd rather have you do it. And please describe your request. So you might have told me already what you wanted to do, and I might be able to fill this out for you, but I'd want you to do it as well, and making sure that you add what I was given into this, if not the other way around, etc. But you can see that there, and we'll go through the process of you completing that. So again, you'll want to submit it through that, and I'll go through that. And I said down below, you can skip this next part since you're a startup and stick to what's above first by filling out the digital application, and then we can gather more. For non-startups, that's what I would expect. Since we're in 2023, I'm not going to go through all of this, but that would be the requirements. And I have other videos as a non-startup, and this criteria may change because of the year. So 2021 business bank statements now become 22 and 2022. 2021 through 2022, recent 6 months of bank statements become 2022 to 2023, depending on where you are. And then 2020 and 2021 P&Ls, now it's 2021, 2022. So again, it depends. So that's where I want to leave it with. I'll have a video review as well for South End Capital and the division with Stearns Bank. I'll try to link it to you down below. I've already created one. But that's what you need to know about startup funding. Just to recap, and we'll close up shop. Make sure you have that equity injection. It's not always going to be sweet 10% in the market, or if you don't have enough experience. So you want to have enough of an equity injection to get you through, have enough cash flow, have enough to service the debts, making sure that you have the right relationships that are coming in the door. If you're looking for an alternative for a startup and the SBA doesn't work for you, then we have the personal and startup loan. And I have this, I'll try to link it to you down below, if not another resource. But this is what you can check out. And you can see how much you can pre-qualify for with a soft pull. It's an initial qualification, soft pull before there are any hard pull offers. We'll let you know at that time when it makes sense. And that's how they work. And there's also a text version. It might be there, it may not be there. So what is a personal and startup loan? It's similar lending services with similar qualifications that offers you a convenient way to borrow when you need to pay unexpected bills, invest in new cabinets for your kitchen, use it for any business reasons, like starting a business. You're a non-startup, buying equipment, growing and expanding, etc., in the form of installment loans, lines of credit, or credit cards, and the personal lines of credit. And the difference is there within the home equity line of credit, and which can be probably less than the personal line of credit, but there are more advantages here than combinations. So you got to think about pros and cons, and we'll let you know. It's lower rates and easy process makes it great alternative to medium to higher rates, merchant cash advance or cash advances, some term loan options out there, funding. But not to say that those aren't bad or bad. There's a purpose and a time and a place for those. So you're eligible. I'm not going to go into all that eligibility, but you can view this as an alternative. And even if that one weren't to work, there are other alternatives that I can show you. And you can see here an article. If you were to click there, it might still be there. And you can go to this and review more if you have business revenue, bank statements, and you want to see other ones, collateralized options, and what you can do there. Those are available. There's also the credit line hybrid program. So if I go here, let me make sure I can find it. So we're going to go away from this post. And I have a blog site as well that I had done a long time ago. And so Viral Home-Based Pursuit and Viral Funding Solutions are the same. It's just what I had before, and I have multiple businesses. And so I do a lot of my stuff here. I might transition over to my Viral Funding Solutions site, but you can learn about the credit line hybrid and getting 0% interest business credit cards for up to 150, if not 250,000 with corporate credit. We can build out a structure for you, credit-wise programs. And if you are dealing with financial hardship, you don't have the revenue, pre-revenue, there are other circumstances, building your business credit, crowdfunding, equity crowdfunding, and microloans through the SBA 7A is another one, the SBA Microloan program, the Community Advantage program. And those may not be as easy to get, especially the Community Advantage and the microloan up to 550,000, usually 50,000 there. But there are other solutions that are on the table, and you won't know as well unless you fill this out. And I'll leave more information of those services as well in the description. So if you got value from this, please give it a thumbs up. Share it with others who you feel will find value out of it. It can be a complete stranger, a friend, or a family member, but you know you help them out at the end of the day and they're getting value from it. And also, if you haven't subscribed, please click that, or hit the subscribe button and click the bell notification icon so you do not miss any future content I will be coming out with. It. I know I'm not a video guy, so sometimes I'm like, hit or think or click. And so when it comes to that point, it happens from time to time. I like to do the things like behind the scenes. I'm a systematic and mathematically minded person, but I know this is something that I've had to do for some time to help you guys and get the value from somebody who's like in it every single day. So there could be more that gets added on top of this, but fill out that questionnaire down below and you'll be able to, start a business there. You can see that, you can fill that out. It look a little bit different, but there it is. And yeah, that will conclude everything that I wanted to go into. Business plan, the startup with the SBA 7A. It's much harder in a lot of cases. There are alternatives. You can use a personal loan for startups. We can get you an installment loan, personal line of credit, or credit cards, a combination of them. Go to a credit union, maybe use those as a down payment, or do what it is you need to do. So that'll be everything for me. Down below in the description, get that questionnaire form filled out. And if you have, I'll get back to you soon. Appreciate you. Thank you for watching. And I will talk to you on the next one. Take care.